Ladies and gentlemen, some financial tremors are now happening in the financial market globally, and some big decisions are going to be made by Donald Trump and Jerome Powell. All these are very critical to our direction in the stock market. So let's just watch on, shall we? So monitor closely because all these big decisions are going to be made and announced soon. And whatever direction they are made will have very critical implications to the financial market. Again, these are my usual disclaimers, not financial advice, not telling you to buy or sell. And let's go. So the stock market yesterday closed, okay, decently okay, only a few points down at a point, about two-thirds down from the day before. And currently, right now, the futures market looks like it's down as well. Now, it's down is okay, but the you can recognize that it went down and then it went up, then it went down. What does it reflect? It reflects that the market are really uncertain of what things are happening or going to happen. So the first tremor in the market is the Taiwan dollar has now hit a record rally. So right now there is an unprecedented 2 day surge of 8% of the Taiwanese dollar versus the US dollar. And this is really a trigger of a trade war outcome. And the Taiwanese market right now has no buyers of US dollar, as insurers, exporters, and investors all want to sell the US dollar. And the precise reason for this sudden rise was unclear. And there were rumors that there was an agreement reached between the Taiwanese negotiator with US negotiator that they would actually cause the US dollar to fall and let the Taiwanese dollar to rise. But this deal is repeatedly denied by the central bank. But nevertheless, the Taiwanese dollar still jumped significantly. So the oil prices falling is the second tremor that's now happening in the financial market. Oil prices have collapsed quite significantly. The WTI price, which is the West Texas Intermediate futures, have fallen to $55 per barrel. That's very significant. Where Brent futures have collapsed to $58. There was one time they were 100 over dollars. So this one is really very low. They are at its lowest since February 2021. And that's a point of concern. It is largely caused by two reasons. Number one is that there is a real demand softening that's caused by a possible recession pressure due to the US-China trade tension. And the second one is really OPEC plan to increase its supply as well. And while a lot of people are not sure whether the markets are going to turn out recessionary or not, whether the economy is going to turn out down or not. Well, these are telltale signs, right? Oil prices cannot lie, so it is a real issue. The WTI has lost 7.5% and Brent has lost 8.3% last week. And this has offset the optimism right now that we are seeing in the stock market because a lot of people think that the US-China trade talks could happen soon. As a result, markets start rallying. But this is not showing up in the oil price that we are seeing right now. So oil prices, if it falls below $50 a barrel, could hurt final decisions for many oil offshore projects. If if the prices fall below $50, I think some of the oil producer will start incurring losses. Incidentally, Singapore is also a major oil refinery of the world, at least in this region. And if the oil prices were to fall significantly, we will be in trouble as well. In the third tremor that's happening right now, the Port of Los Angeles said that shipping volumes will plummet by 35% next week as Chinese tariffs start to bite. So US supply chain risk being collapsed, just as what we saw during the pandemic as tariff strains imports from China. So US retailers right now are facing potential shortages and it's coming sooner than they expected. Exports from China fall could lead to what US is going to experience in a massive way, shortage of goods. And that could lead to no massive inflationary pressure. Now, this is quite severe because this is almost an embargo already, right? The goods are stopped from entering, and this is quite a serious matter. How bad is the drop in Chinese exports to US? Well, shipments from China to US are plummeting, according to Flexport, a major supply chain company. Bookings from China has dropped as much as 60%. So the port of LA, which handles US imports from Asia, report a 10% year-on-year decline in shipment last week alone, and arrivals could fall by 35% in the next 2 weeks. So again, right, all the goods that are coming into US are now facing shortages, and there are no suppliers that can fill the gap right now. In short, we're going to have a lot of good shortages and not enough things to go around. Inflationary pressure will probably come, and that's quite serious. Let's not forget the tariffs that US imposed on Chinese now is 145%, and Chinese, on the other hand, has slapped 125% back at them. So this kind of tariffs basically stop all trade. And the clock is now ticking down to zero, as Donald Trump need a trade deal badly, at least for the optics of it. Then he really need to show people that things are happening. The promise of a potential deal that the administration has said, India, Japan, South Korea are the most likely countries to reach a US trade deal first, have restored some confidence in the financial market and boosted some hopes that the world may avoid the worst case scenario from a fallout from the trade war. But as the week rolls on with no deals in sight, the Trump administration risks inflicting serious economic damage that could quickly turn into a US and global recession. So US and global recession is now on the way because there's no deals being signed. Okay. And last week, quarterly report on GDP was bad. And right now, we are potentially going to see more and more. So Trump need to announce one deal at least, just to show that things are happening. Well, the truth of the matter is that 90 days is not enough to cut a global deal. The 90 days tariff, provides little time for a typical back and forth trade discussion, which requires months, if not years, to craft a trade deal, said Jacob Jensen. So, the significant difference is that if these deals are official, written trade agreement rather than verbal commitments to buy more US goods, you know, uh, as one has long-term economic implication and the other one could be ignored down the line. So Trump really wants some hardcore commitment, but this kind of commitment is very difficult to execute. So now these kind of trade negotiation take a long time to execute. 90 days is likely not enough. And if by 90 days you cannot conclude something concrete, then we are going to have a problem. It will be difficult for US representatives to negotiate potentially 100 separate trade agreements within 90 days, meaning that Donald Trump will soon have to determine whether tariffs will have to be reinstated or delayed further. So because it's just impossible for trade deals to be concluded within 19 days, whereas you draw closer and closer to the deadline, Donald Trump have to make one big decision: continue the tariffs, as originally planned, or delay it further. Well, to Donald Trump, his credibility is not important. So deadlines can be extended indefinitely. Just to give an example, Donald Trump says that he may extend TikTok sell-off deadline again. He just announced the deal. So he says that, oh, TikTok has a very special piece in my heart and special place in my heart, and he believes that TikTok is the one that helped him win the young votes. Therefore, he thinks that he's willing to wait for TikTok to find another buyer and extend the deadline again. So if he's willing to do this, then for him to extend 90 days is not that big of a problem. So what's going to happen? These are my speculation, and please let me know whether you think this will happen. Number one is that there are two main decision makers that will chart the future of the financial market. Number one is Donald Trump. Number two is Jerome Powell. Jerome Powell, over the next today and tomorrow, is meeting the FOMC, and they are going to jointly decide with the FOMC members whether to increase interest rate or decrease interest rate or stay put. Most likely, he's going to stay put because it is difficult to see the impact of all these things that are happening. And Jerome Powell will take probably the safe approach of just maintaining the interest rate. Now, Donald Trump, on the other hand, I think he will chicken out, right? He will chicken out. He won't dare to play too hard a ball with all the countries of the world. So he will likely extend the tariff deadlines or announce some light-weighted MOU, some woo-woo MOU. MOU stands for Memorandum of Understanding, and say, oh, we've concluded a deal with Japan, with Korea, or with Taiwan, or whatever. These are the high levels of the deal, right? And the actual contract will be signed 2 years later or 3 years later because this thing takes a long time. But this is probably enough to set some people, at peace, at heart, or whatever. The truth of the matter is that all these MOUs is house sell logy, okay? Yeah, just house sell logy, this house sell contracts, okay? Now, if he don't chicken out and extend the deadline or at least announce some light-weighted MOUs, it'll be disastrous to the financial market. The financial market is gonna collapse big time, and we're gonna see it hitting new lows again and things like that. The next thing he has to do is to ease off on some Chinese imports. To him, no big deal. Yeah, credibility not important. So let some of the Chinese imports comes in. If not, is Chinese, which accounts for most of of U.S. Imports. Will cause a major shortage in US, and there going to be runaway inflation or things like that. So supply side disruption is something very serious. So he will have to ease off. And if these are the outcomes, then maybe we have not so bad a hit. I'll be frank with you, I cannot speculate what will happen, with a high probability. Things can flip either way. This is what I speculate will happen. But I also think that, there's a chance that Trump would do some crazy things I never thought of, and cause the market to go into turbulence as well. But I think if all these things were to happen, that's why I said market will just continue to hover somewhere around it is right now. Maybe some up, some down, but it is really troubled times, and it's really hard to say what will happen. So my take is this: let's all monitor very very closely because things could flip within a snap like that. So hit subscribe if you want to be updated with all these sudden changes that's happening in the financial world. And don't miss a episode or a live stream that I cast, because all this could mean very serious flip for your financial positions. Okay, so let's watch on closely, and I'll see you when the things happen.